All right, let's talk about Rigetti Computing, ticker RGTI. This thing has been an absolute rocket ship lately, one of the hottest stocks you can find. But, what happens when that rocket starts sending back some conflicting signals? Today we're going to unpack a technical analysis that shows this fascinating tug of war between a really powerful trend and some serious signs of fatigue.
First off, you just have to step back and appreciate the sheer scale of this move. We're talking a 200% rocket ride up from its October lows. That is an explosive, attention-grabbing rally that has put this quantum computing company right on every single trader's radar.
And yeah, that's the billion-dollar question, isn't it? After a move this big and this fast, analysts are starting to squint at the charts, asking, hey, is this engine starting to sputter? The weird thing is, the data is telling two completely different stories at the exact same time, and that's what we're going to get into. Okay, so let's start with the big picture. This stock has been on an absolutely incredible run. The analysis we're looking at caught it after it jumped nearly 10% in just one day. The volume's high, the interest is definitely there, but when you look a little closer, some cracks are starting to show. Now, before we get all doom and gloom about those cracks, the report is super clear on one thing. The big picture, the long-term trend, is undeniably bullish. You got to keep that in mind, because all the short-term drama we're about to talk about, it's all happening inside of this really powerful uptrend. So let's start there. Let's make the case for the bulls. What are the signals telling us that this rally still has more gas in the tank? The report lays out several key indicators that are just flashing green. And when you look at the bulls checklist, man, you see a lot to like. The MACD value is positive, which basically just means recent momentum is strong. The price is way above its long-term averages. That's a classic sign of strength. The Arun indicator, which kind of tracks how strong the trend is sitting way up high. Even the money flow index is suggesting that more money is coming into the stock than leaving. You put it all together and it paints a very, very convincing bullish picture.
Yeah, and this quote from the analysis it really hits the nail on the head. From that bird's eye view, the momentum is there and the foundational chart patterns are exactly what you'd want to see if you were feeling good about this stock's future.
But okay, here's where the plot thickens. Because for every one of those bullish signals, there's a counter signal that's whispering, be careful. This is the case for the bears. The whole argument that this rally is getting tired and might be due for a break, or maybe even a pullback.
And to really get the bearish side of things, you've got to understand one key indicator, the MACD histogram. Honestly, the best way to think about it is like a speedometer for the stock's momentum. When it's growing, you're accelerating. But when it starts shrinking or goes negative, you're hitting the brakes, even if you're still technically moving forward.
So this is the whole puzzle right here. It's a total contradiction. The MACD value is positive, that's bullish, but the MACD histogram is negative and it's shrinking. What that tells you is that while the stock is still in an uptrend, that uptrend is losing speed and fast. The gap is closing, and that is a classic early warning sign that momentum is just getting exhausted.
And that's not the only red flag. The price has actually dipped below a key short-term average, which is often a first sign of weakness. There's another indicator called the Trend Quality Index, and it's low, suggesting this whole rally might be built on a bit of a shaky foundation. In fact, if you just look at the most recent price action, the slope is actually pointing down. All these little signals are starting to add up to a picture of a very tired rally.
So, what does all this technical jargon actually mean for the stock price? Well, it means this tug of war between the bulls and the bears creates a really clear battlefield with very specific price levels. So let's look at the three key numbers that traders are going to be watching like hawks.
Okay, first up, you've got the floor. The analysis points to $36.84 as the key support level. This is the line in the sand. It's where the buyers are expected to show up and defend the price from dropping any further.
Next, right in the middle, you have what the analyst calls the tipping point, or the pivot point, at $39.40. You can think of this as the day's center of gravity. Whether the stock can stay above this or falls below it will probably set the tone for the whole day.
And then at the top, we've got the ceiling at $41.14. This is the key resistance level. It's the price where sellers who got in lower are likely to start taking their profits, and that creates a barrier that the stock will need some serious buying pressure to break through.
Okay, so we've got a strong trend, but it's losing steam. We've got these clear lines in the sand for the price. So how in the world does the analyst put this all together? Well, the report boils it all down to three possible scenarios.
And wow, this chart right here just perfectly sums up how uncertain things are right now. The analyst gives a 40% probability to a bullish continuation,
and an equal 40% chance to a neutral, sideways grind. A bearish breakdown, that's seen as the least likely outcome, at just 20%. The odds are basically a coin flip.
So, let's break down what each of these scenarios actually means. That 40% bullish case gets triggered if the stock can bust through that ceiling at 41.14. The 40% neutral case, that's if it just stays trapped between the floor and the ceiling. And that little 20% bearish case only comes into play if it breaks below that floor at 36.84.
And that's where we land, right at the heart of the dilemma for anyone watching RGTI. The long-term trend is supposed to be your friend, right? But the short-term momentum is showing some really serious signs of being exhausted. The analyst sees the odds as a toss-up between going higher and just going sideways. So it all comes down to this. In a battle between a strong trend and some really shaky momentum, which signal do you trust?